Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500 on a 4-hour chart, and everything's pretty much going according to plan. The count for the S&P 500 futures and cash market are slightly different. This is a CFD here, so it's obviously got the off hours included in it, taking over from following the futures market, so to speak. But the cash market from this particular low here would have a 5-wave structure here as such. That's what it looks like here. So it's much cleaner sort of count. So we can expect an A and a B and a C to come back at least from this point here. For this particular market here, if you're looking at the wave count on our chart, you'll see this is up for 1 and back for 2. Up for 3, 4, and 5 to here, and then the A, B, C here, and then pushing up for the third wave up through there. So slightly two different counts here, so just be mindful of that. And also what we would need to see on the cash is the important 3-wave structure here. Once that's in play there, then we need to see a move up through here to make that a 3-wave structure, and if that's the case, then we'll be looking for a much further to the upside in terms of this little 5-wave structure here would be just wave 1 and back for wave 2 and then up for wave 3, so to speak. So that's something to just to keep an eye on. So any trade across the 15-20 here, in both cases, look for the classic trading levels pattern through here, which is first of all the arrival, the reaction, looking for support, the first high above the level, then an A and a B and a C correction, and then finding support on that level there. The other markets are this is how it is. It's just a 2-hour chart, but looking at the 5-wave structure up through there, and then the ABC here that we're looking for, and then up through here. So this is, of course, all further up through here. So yes, look, we need to just be mindful that of the cash situation, and also this as well. So yeah, same with the Dow Jones as well. There's a little bit. This is just a 20-minute chart here, so it looks like we've got up for 1, back for 2, 1, 2, 3, 4, 5 for the third, the fourth here. So it's still got the 5th wave to go, so there could be another little push up through here before we see an A and a B and a C across here, but looking for support on the 15-20. And also more importantly as well is the 15-23 here, so it's the top of group 1 here, 1, 2, and 3 here. So support on top of group 1 would separate it from 15-20, and the Dow's the same as well. But the Dow has finally pushed through as we thought that it may, because we could see that there was corrective patterns within this structure here. But once again, we've got the same sort of situation with the cash and the futures, slightly different wave counts. So we'll be looking for 5 waves up into this little section through here, and then we'll look at a corrective pattern through here. But also too, what I wanted to point out, what I find is that you know, in a normal case, when we get the first high above the level, then it comes back and retest the 14,000. But when you've got a build up through here like this here, this accumulation pattern through here, then it acts like a spring sometimes, and it won't come back. It will just continue to climb up through there. So just be mindful of that as well. But in this little tiny structure here, there will be 5 waves in there that are incomplete just yet. I've got a smaller one there. Okay, this is a 5-minute chart here. So 1, 2 to here, 1, 2, 3, 4, and 5, a third wave, and then 1, 2. So it's still going. So it'll end up through here somewhere, and then fold back. So it's still got a bit more to unfold through there. If support is found on top of group 1 here, then expect the 1450 to be reached, but it can go higher as well. Normally, you'd look at the first level of the next smallest degree, and that would be 14,100 here. Of course, you've got all the sub levels in here as well to navigate. So, but you can still use Group 1 here. If the 1420 here became the resistance within Group 1, then the market is still connected to the 14,000 at that stage. So that pivot within Group 1 here is an important factor in here. Yes, it can spike down below it, but if it on the retest, if it fails the retest, then it's doomed and will be part of the 1400 here. But otherwise, a spike down into 14, 16, 17 is fine, and then a move back up, finding support on the 20s where you'd get a position and then look for another position on top here, and then getting up to here. So, but anyway, look, bottom line is we're looking for this first high above the level to complete within 5 waves, and then looking at its resistance there. But pretty much the same with the European markets as well. With the FTSE here, we were looking at, from this high here, we're looking at a 3-wave structure here as a possible 3-wave structure. We just needed to see a move to the upside. And yesterday we were looking at this here, saying that you know, it's kind of in 3 waves here. So what we were looking for was support above the 6,300 there. Might just have a look at the FTSE. Actually, I was looking at it just a moment ago. Just bear with me here for a second. Just having a look at the bigger picture. Just find it for a second. Here we go. Okay, so this is the FTSE here. Just might as well have a look at the whole thing through here. I mean, the FTSE is very similar to the ASX 200 in the way that it moves and so forth. So we can see that we'll have a trend line support through there. We also know that the medium level 65 is up here as well. 65 is always a strong number. And looking at this little situation here, so we could say that with the minor levels through here as well, so that would be if support is found on 63 here, then we can start looking at the medium level here, it's 60, 65. I mean, it spiked up that way as well, so it's looking at that here a little bit closer in here. So we can see that from the 5800 here, for instance, we can see that this little wave up through here, we could call that wave 1 and wave 2. This would be 1, 2, 3, 4 in here, or may even be in there. I have to recheck that spike there. But a 4th wave here, support on here, and that will give us the top of the 3rd wave. So the 1, the 2, and the top of the 3rd, the 4th, and the 5th coming up through there. But I also wanted to point out too that in the next degree larger as well, from down at the 5-2 area through here, this would also be up for wave 1, back for wave 2, a nice strong 3rd wave happening here, isn't it? Which is not complete here yet. So there's still more to come on this upside up through here. So that's good news. Okay, so the Australian market. Well, as you know, we're looking at this structure coming up, this 4-hour chart here, looking at this structure coming up. So we know this is a little 3rd wave in here. We know this has got the characteristics of a 4th wave in here because it's getting all choppy and sideways and so forth. So typical wave 4 correction, but we should still see further upside here. In fact, we should see, once it's ready, we should see further upside above the 5,000 here in relationship to this particular structure that we're following through here, because this would be basically up for 1 and back for 2 within here, either to here or to here, 3rd wave, 4th wave. It's still got more to go here, but you know, you just got to understand that there will be selling pressure coming in here. It's not going to be a bed of roses, so to speak, but do look for this, you know, support on the 72, and stops would be have to be under the 65 here in this particular case. But make sure you've got a strong. It hasn't found support on that 72 just yet. Yes, it's traded above it, but not once has it developed support. So that's what you'd be looking for there. Do we have a smaller chart here? Okay, yeah, this one's fine. Just the 1-hour chart here. It's kind of getting there, isn't it? But so this does look a bit positive coming up through here, so it should find support and climb up on the 80 this time, and head further up through there. But this is a struggling situation here, But if the US dollar finds resistance at 80, then that will help the material sector push this up a little bit further. And the base metals seem to be positive, and the copper market, which we should have a look at now. So the copper market here, as we were looking at yesterday, we were looking for a little 5-wave structure down through here in this 4-wave C here, and that seems to have come in quite nicely, and we should see a push up from there. But that could also complete this this A, this B, and this C here. So I think that's the case. As long as the market stays above the 372 here, then we can look for a positive move working itself higher above the top of wave 3 here. So we just really need to see how that goes. So we need to see an impulse wave up here. We need to see 3 waves back, and that will give us the confirmation that we will be moving higher through there. So it's not quite confirmed yet, because this could still be down for wave 1 here, ABC back for wave 2, and then this could be wave 1 in 5 waves coming down, and ABC coming back for 2, and then down further. I don't think that's the case, but we just need to be mindful of that, and we need to rule that out. So we do need to see a 5-wave structure up and a 3-wave back, and then that will tell us that we're going to get another 5 up through that way. Of course, there will be resistance coming through these these highs here, but we'll get to that. But as it's going so far, it's looking positive, so that's good news. The gold market. Okay, just bear with me here. So, in a bit of a nutshell, we're looking at from wave 2 here, wave 3 to come down through here. This little move back through here, we're considering this a wave 4, which should pull back to the 1652, which is roughly the 38.2 retracement level, and also the 4th wave of 1 lesser degree. So let's just have a look in here. So the 4th wave of 1 lesser degree is here, so we can pretty much sort of move that into here. Wave 4s can be complicated, so this could, have a bit more sort of sticking to do through here, but we'd expect in due course for it to, because we're tracking from wave 2, top of wave 2 here, which is this one here. We're looking for down for 1 and back for 2 here, as we mentioned yesterday, and then just counting the little waves down through here. So we're up to 4 at the moment, but look, that could get a bit more complicated through here. The bottom line is that this is 1650 through here, the medium level, so it's going to stick here for a little while, but at the end of the day, if this becomes the support or the resistance, then you need to be on that side of the market. However, the Elliott is dictating that there's further downside to for this to come, but we need to see the market reject the 1650 here. We need to see the supply come in. So just a bit of patience and given a bit of time, then that will unfold there. Silver's much the same as well in terms of working through the 31 here. And as mentioned before, look, working with the the old lows and so forth, you just and large old lows and large numbers, you're going to expect the market to be sitting there for a while, So support back on 31.30, which is up here, which is quite high, then that would change the wave count. But as it stands, this would be a wave 4, the same as the gold market, and eventually, it could get quite complicated through here before it drops. So just be mindful of that. Best less is more, so to speak. So smaller position sizes, giving it more time and more room to unwind. Right, let's have a look at FX. Okay, the US dollar, we're looking for an ABC correction to the upside, and this is probably it in play here, but and our target was the 80.50, as you know. So what we need to see now, we need to see the 80 as a retested resistance. That would confirm. I mean, this process that's moving to the upside here is just it's just a normal. Reasonably normal process for a bullish market to the upside. So what we need to see now is we need to sort of confirm our sort of larger patterns, and that means that the AD as resistance. In fact, the price step back down through the, say, the 72 here would confirm overlapping wave structures. So with this structure over here, so that would also confirm that that the trend up is completed. So we just need to give it a little bit of time here. It's quite normal for this to retest the 80. It's also normal to see a bounce off here. We could also see that come down through here first, and then a little ABC back up through here, and then move down through here. So it's going to take a session to to maybe even two to sort of reveal what its intentions are through here. But in this terms of this ABC correction up here, and that can also be placed there as well, would see the euro doing the flip side as well. So that's the A, the B, and 5 waves in the C wave down through to here. So what we've got at the moment here, we're looking at this being a low yesterday, as you know. Looking at counting this as a positive wave structure to the upside. So you can see that it's building quite nicely. Sure, it's a little bit difficult to count that. You've got to be kind of familiar with the beginnings of the euro count when it's doing a positive thing, and you just get to know it. But that is positive. But you can start to see it here. You can start to see this 3-wave correction here, then the move back up through here. So that will just naturally create the long once you sort of understand that a bit. But you can also see the 5-wave price action through here as well. So we're getting impulsing structure through here. But the other thing too is to understand is that from this point here being very small within here, all of this here is expanding rather rapidly, isn't it? So we're seeing an expanding movement, momentum through the market. So that's a trend. So yeah, so all things being equal, this A, B, and C here would be done and dusted. If you're a little bit unsure, then support on the 135 eventually would, really solidify that situation, because, I mean, this move coming up through here, overlapping this move coming down through here, makes it an A and a B and a C. Well, confirms it anyway. So that's good news. But when you're dealing with derivatives, you want to see a nice clean break of that, and the 135 would do that. So from the 135, the next level up, that's that's trading level 5 in a sense. So the next number is 8, isn't it? 1, 2, 3, 5, and 8. So 8 would be making a new high above the old situation here and ending up over here. So that's what we'd be aiming for there. So yeah, a good trade coming in through here. This is there'll be other currencies lining up with this as well. The euro pound, for instance, should be having its first little 5 waves up as well, and it will be having its little ABC coming back as well. So look for that to go on the long side as well. The euro Australian is also setting up for a long trade as well. The Australian dollar is pretty much sort of on track. Yesterday we're looking for a move up for wave C here, but I'm a little bit sort of concerned about that now, because yes, this is a C wave up here, and yes, it's in 5 waves and so forth, but yesterday when we were talking about this here, we were looking for this is an A and a B wave to here, because B wave's always in 3 waves, and then a C wave up. But I mentioned that if it failed just in here when we're talking about it, and we got another 5-wave structure down into this area down here somewhere, then that would give us basically 5-wave structures to the downside. So that really means that if that is the case, then I've missed a wave somewhere, and this means that this would be down here as such there, and then we'd be looking for an A and a B and a C wave here. So we were looking for a short in here. That's probably a little 4th wave in here, a little 5th wave to go up through there. So, in terms of the short, it may not be there just yet, because we may get this extra A, B, and C in here. And so to be safe, to be sure, we need to be have that 102.72 there as the retested resistance before shorts can come in and play there. Otherwise, there's a bias for this to stick to the 103 here. And even see a larger rally unfold there. Where I could have made the error in this extra wave structure here is sort of way back up, the top up here, in this little section here. So we had this down to wave 1 here because it's a bit complicated, and then the ABC back for the 2 here. But it could be in here and up for 1 here, and then the A, the B, and the C back for 2 here. And then the next structure down, the 1, the 2, the 3, the 4, and the 5. It's just that the wave 4 here went rather high compared to wave 1 here. And that breaks an Elliott rule. But when you're dealing with derivatives, that's quite a common occurrence, as Elliott developed his rules off the Dow Jones and one of the other non-leveraged products, so to speak. So I think that's where the error is. So I'll go back over that and check that out there. So look, until we get this sorted, the 102.72 as resistance would be the short. While it's above that, it's just going to vibrate across this situation here. If it ever found support on top of the 103.30 or 33, then that would be a long position from that. But let's give this time to unwind there. Okay, so that's really it. Just sort of recapping a little bit. We want to see, in a nutshell, to be sort of positive long, we want to see the US dollar index stuck under the 80 as resistance, and the rest of the indices are sort of heading in the right direction, as you know. So the trend continues. So a positive market. It's just a matter of navigating through all the little twists and turns. So good. Alrighty, well, good morning and good luck.